All right, so approaching lunchtime on Monday, I just want to make this quick video just to make a couple of points, summarize a few things. Um, so going forward, things might be a bit clearer because I've been receiving some feedback, most of it really good. I think one or two people are having some issues, but I think what's important at this point is for us to define what success means, right? Because what I've noticed is some of you go for 100, some of you 150, some of you 300, some 500, some trade one contract, some trade three contracts with three targets. And so all this is fine. I'm not here to tell anyone how to trade. Um, but I think it's important for us to have an objective, uniform definition of success. So to do that, I think just for the purposes of the test run, let's agree that 20 ticks of net profit in NASDAQ is a successful daily profit. 10 ticks in oil. If I'm going to start doing ES, then 8 ticks in ES. And then it doesn't matter if you're trading three contracts or five micros or whatnot. At least we're all going to be on the same page. All right. So yesterday, after 6 p.m. Globex Open, the fourth, um, so I sent out to go long 12,009 or short 11,941, and the oil was to buy 81.40, sell 79.78. So let's take a look at oil first, because what happened with oil? So this was the open, and when it first opened, and I kind of looked at it, I began to put some numbers together, and I thought I had plenty of time, just plenty of time. They were trading like $80.90 or something, and I'm thinking I have plenty of time. Uh, by the time I actually posted it, I think it was 7:15. That's what the timestamp I think says, right? 7:15. 7:05, 7:15. Yeah, so I think 7:05. So anyway, so as I'm posting it, I'm seeing 81.40 or like 81.38. So I don't think anyone caught this. I doubt it. Um, about an hour later, there was a dip below the trigger, and again hitting 81.40 and giving you like 35 cents. So again, you're looking for 10 for a successful trade. But you know what? It's Sunday night, and only people like me are staring at charts on Sunday night, and you are better than that. So let's forget about Sunday night. Uh, so the next trigger, 4:30 in the morning. Again, I don't expect anyone to have caught this, but it produced a move of about looks like $1.30. So that's 1,300 per contract. But again, um, I'm not. I'm going to assume no one caught this long. So then the next interesting area, which is why I wanted to start with oil, was at around 9:30 or 9:40. So let's make this bigger so we can take a look, because I want to explain something here. I think it's important. Whoops. So I don't want to make this bigger. Why can't I make this bigger? Go. All right. So we're dipping below 81.40 and then coming up. This here is a legitimate long trade. And I still want to make it bigger, just so if you took this long at 81.40, looks like the high is 49. Oops, it's 49. Yeah. So the high is 49. So if you, just to be, completely objective and completely fair, if you took a long at 840, um, at 81.40, you would not have made your 10 ticks. The question is, where would your stop be? And I would suggest your stop should have been right below this pivot low before 81.40 hit. So we're talking about 81.17. So about 20, was it 23, right? 23 cent loss, or $230 um, per contract. So this would have been a loss of 200, and let's just say 23 cents. It's just easier to remember. 23 cents. It triggers again and again. Here is really a legitimate trade. Again, to be fair, this is a legitimate trade. And again, he would have lost 23 cents. So you are down 46 cents from this little mishap over here. Then what happens is there is this here, which is a trigger. Now, where would your stop be? So the trigger is 79.78. Your stop should be this pivot here. So around 80.21. So it is what, like 43 cents. And you might say, well, 43 cents, $430 per contract, is just too much. Sorry, it's just too much. If it's too much, then you don't take the trade. You don't take the trade. Um, Very often, triggers trigger more than once anyway. Um, Understand that obviously I don't control what pivots are, I don't control the markets, but you know, um, if you have a hard stop, that's fine. Whatever your hard stop might be, just understand that market does not care about your hard stops, but markets would respect pivots. So either you did not participate or you just had the stop here. Let's say you did not participate. Another trigger now. Again, 79.78. Here it is again. Your stop now is here, right above this swing. Here. So around '02. So now it's a 24 cent stop, which I think is reasonable for oil. Now you're down what? You're down 43 cents, or $430 from the previous two longs that did not work out. But now look at this move from 79.78 down to 78.78, right? Am I right there? Yep, 78.78. So a full dollar, $1,000 per contract move lower. So you make up the 43 cents you lost, the $430 you lost, and you hit your 10 tick target, $100 per contract target. If you want to make it a bit more just to make up for commissions, that's fine. You definitely had enough room. So, because one of the comments I received was one trader likes to increase contracts as he's taking losses, and I think it's a terrible idea, and there is no need for that. Um, if you stay patient and if you have your rules in place, the market will give you the opportunity to make up the losses. There is no need to start increasing number of contracts, because then again you go into a situation where you are over leveraged, right? What do I say? For every contract traded, for regular e-mini contract, 3,000 should be available in drawdown. In this situation here, you were down $430 in drawdown, which is nowhere near, um, you're not in danger of blowing your account. So that was oil. Let's get to the NASDAQ. So with the Nasdaq, the sell was at 11,941. Not much really happened here. It was not. It was 942 actually, because I was looking at this. This was 942, so this was not a trigger. The trigger finally happened, I think, here. I'm not sure if this was a trigger. At let's take a look. I'm not sure. I don't even remember this, to be honest. Let's take a look. No, this was still the 42. This was not. This was the first, because I received emails about this. So this was the trigger. A couple of you sent me one and done with screenshots of this short. Then came up over the trigger again and triggered a short again. So Nasdaq was fairly smooth, I think. Again, I need your comments, both good and bad. Please write comments um, in the comment section, because I need to know if you guys had any issues with this. I think it was fairly smooth. Really not much of a drawdown. Again, if you're taking this short here, your stop needs to be at around, I mean, 975, 977. I don't think 35, 36 points for Nasdaq is a lot, but again, if it's too much, and you're using the pivot approach to put your stops, you just need to skip this particular trade, and wait, because again, I don't decide what the pivots are. I just know where the triggers are, and I know that a trigger will probably be hit more than once in a session. There was a nice attempt at it, just couldn't quite make it. But then this one did. See, and here is an example of, let's say the 37 points was too much for you. Look at this, right? Comes up, hits the trigger. Now, what would be the stop here? Around 56, 57. So that's only 16, 17 points. And I think we can all agree 16, 17 points on a NASDAQ is no big deal. Give you a nice target here. If you're looking for, 5, 6 points, I mean, easy. Give you a heck of a lot more. Those of you who are looking for more, as I said, it's available, but I just need a uniform, objective way of defining success. So for that purpose, maybe you can have a chart running just with 20 ticks on the Nasdaq, and 10 ticks on oil, and whatever else I might put out, that's going to be $100 per contract. So that's it for today. I did want to talk about price completion levels, but I don't have a right chart to show you. I'm going to send you on Telegram these levels for this week. The levels I send are good for the week. This week's numbers are very similar to last week's, slightly off, but overall very similar. In time, there is a way to trade those levels, because what you will find when you put those levels on your charts is that what price does is it moves. It travels from level to level, from level to level. When it arrives at a price completion level, it's either rejected, it kind of trades around it, and then very seldom it breaks right through without any acknowledgement. Um, I think I'll make a separate video on um, I guess, understand these levels and how to apply them to your trading. That's it for now. Again, very important. Please leave comments. It's very important to me, the good and the bad. If you had a bad day, if something did not work for you, please let me know. It's just very important as far as figuring out if moving forward, this is something that could work for other traders. Thank you.